So let's get a bit more sense into the CMC meeting, the final one for 2019. Let's cross over to our Abuja studios, where Omiano, who is head office of chief economist at SEC, is standing by to drill down a little bit on that for us on the side. It's a very busy week for the markets, as we told you last week. Good morning. Hope you had a very great weekend. I'm sure it was a very busy one for all of you at the SEC.
Thank you, Bosin, for having me. Yes, you're correct. It was a very busy week. We had the CMC on Thursday, and lots came out of it. We're excited. We think that the market is headed for an improvement, and the SEC is doing what it can, which I think is a lot, to make sure that trend continues.
Okay, great. If you look at CMC, a meeting is very big. You're talking about 1, 2, 3, 4, 5, 6 exchanges CEOs and their team, about the CEOs of those market professional bodies, brokers, solicitors, advisors, and issuers, and all of that. So it's quite a very heavy meeting, including the lawyers in the market. So what are the highlights of this final meeting of the year on the side of the regulator?
As usual, we had presentations from market-wide committees. One of them is that of the Investor Education Committee, and they came up with quite a few things that they are doing, a few initiatives that they are doing and continuing to do. The first one is, as you may know, we have included capital market studies in the basic and advanced school curricula. That's the secondary school and primary school. So the trust now is to begin to prepare teachers' guidelines. And also we are now looking at the university curriculum so that people understand capital market from the basics as they go through their education. Another thing is the e-dividend issue. So far we have about 2.8 million accounts mandated for e-dividend, and we are looking to even increase that. And also but we want more people to be aware of what it is, that you can get your dividends directly into your bank account. We hope that or we believe that would increase or improve market confidence and make a lot of retail investors return to the market. And then also we discussed new products. As you may be aware, we are trying to build a commodities market. We believe that Nigeria is ripe for a vibrant and robust commodities market. So there's been engagement with stakeholders such as the Standard Organization of Nigeria to establish standards for our commodities so that we can create markets, build markets for it. We have a commodities ecosystem work group that has come up with robust, very insightful recommendations on what we need to do to have a good commodities market. We're also looking at the derivatives market. The rules have been exposed to the market and would soon be approved. And also very soon we hope to have exchange traded derivatives in the market. So all these are to deepen the market, improve liquidity in the market, make the market more vibrant, make the market more attractive for investors.
Okay, in terms of the market development and looking forward, where is the SEC now? What's the SEC taking forward? Of course, we have the roadmap for the NCM roadmap with the 10-year document. But again, one of the key issues that has been highlighted this year has to do with market discipline.
Yeah, in terms of market discipline, the SEC is taking this seriously because we believe that investors will not come into the market if they do not trust the market. So we have set up a new supervisory system. It's called the risk-based supervision system, of which conduct is a major part. And we've also continued to engage the market. At the last week, we had a meet the market of the board. Of course, you know that the SEC has a new board, so they met the market, and these things were discussed. Everybody understands what roles they play in the market and what reputational risk is. We believe that all of us have to work together to improve confidence in the market. So the SEC has included conduct in the risk-based supervision regime that we have begun, and the entire market agrees also that we should all work together towards improving confidence and trust in the market.
Okay. We wish you all the best at the SEC. Thank you so much, Umiano, who is the head office of the SEC, or the chief economist at the Securities and Exchange Commission. Thank you very much, Umiano. We appreciate your time this morning. Do have a great week ahead. Thank you very much. This is coming through right now from the Nigeria Statistics Office. This is breaking news. The third quarter 2019 capital importation report from the NBS, Nigeria's Bureau of Statistics, showing Nigeria's capital inflow went down 7.7% in the third quarter at $5.36 billion US. That's lower than second quarter figure, but much higher. It's 7.9% higher than the same figure, the figure we saw in the third quarter of last year. Nigeria's total capital inflow, the portfolio of total foreign inflow into the economy, Nigerian economy, third quarter, July to September 2019, down 7.7% Q-on-Q, the figure printing 5.36 billion naira. This is now hot, it's just out on the wire. If you break that down, as always, that's the headline figure. Break it down into the FDI, that's the foreign direct investment inflow into Nigeria, was down 10.2% in the third quarter this year, lower by that percentage, 10.2%, than the second quarter of 2019 as well. If you break it down again, portfolio investment, that's the foreign inflows in foreign exchange that went into stocks, currencies, bonds, whatever it is, that took the lion's share, as always, in a capital importation figure. That's 30.1%. That's the figure there. And of course, for other investments, Q-on-Q, other investment portfolio, capital importation accounts for 66.2%, up on the year to 69.4%. So the bulk of capital importation into Nigeria, or imported into Nigeria in the third quarter, July through September, declined in total by 7.7% over the second quarter. But what you call the FPIs, foreign portfolio investment, for portfolio inflows and other investments were up, whereas Nigeria's foreign direct investment slacked 10.2% within the quarter under review. That's just coming through from the Statistics Office, and it's already on Twitter. If you want to get it at, you get it there right now. But that's the breaking news this morning. Nigeria's capital importation report for third quarter. Last Friday, we got our GDP numbers. Today is the capital importation. All of this will go before the 11-member Monetary Policy Committee of the Central Bank, who are sitting right now to start their two-day meeting. We're live from Abuja tomorrow from 2 o'clock or 1:30 in the afternoon to bring you the briefing by the Central Bank governor. So these are some of the stories that we are looking at for you right now. We have our inflation for the month of October, printing higher, 11.61% last week. We had the GDP numbers printing higher, 2.28%, more than the second quarter, 1.94%. Now the capital importation report dipped 7.7% for the same period, third quarter, 5.36 billion. Foreign direct investment down 10.2%. Quarter on quarter, portfolio inflows went up 30.1%, and other investment up quarter on quarter 66.2%. We'll drill down all of this for you tomorrow. It's a very big day, as you can expect. Tomorrow is a very data crunching day tomorrow here as we wrap up the month. And of course, you're looking at the final month of the year 2019. 2019. Let's get a bit of a sense of where we finished off this Monday business headlines. The World Bank is sitting down right now with the Presidential Enabling Business Council, that's PEBEC, headed by Dr. Jumoke Oduwole. And the reason is simple. How do we catalyze or kickstart private investments, local and foreign, across Nigeria's subnationals, 36 states and the FCT, a total of 37. How do we get private investments across these states? That is what the World Bank is working now with the Presidential Enabling Business Council to get this private investment into the state governments, because the big brother, that's the federal government, does not have the deep pocket anymore for the states. So they need to get private investments in. This is the conversation that's already on the street. But how do we get the assistance of the World Bank? That is the big story. And on the finance bill, that's one big story last week. It's still making a big splash. Tomorrow is going to be a big splash as PwC gets the head of finance and Minister of Finance, Budget and National Planning, Zainab Ahmed, to sit down and discuss with other stakeholders an executive session to look at the value that we can harvest from the finance bill passed last week by the Senate. The House of Reps are looking at it. The Mr. President is yet to sign into on it. Will he have some amendments? Does it represent what the executive want when Mr. President presented the draft finance bill 2020 before the National Assembly in the last month? And what does he really want? Does what the Senate, what they passed, did it really speak the mind of Mr. President? All of that will be on Tuesday, a very big day. But the same day, on the other side of the waters, is where you have NigerDoc PLC, and is hosting Timipre Silva, who is the Honorable Minister of Petroleum Resources. And he's there with top oil and gas executive, in particular the IOCs, the international oil companies. They'll be there to assess the ongoing work of fiscal local content manufacturing and other things going on, what you know, the place known as Snake Island. That's where a major part of the Nigeria's LNG last train was built, what they call the FSPL. That's the floating space production flow. That's the big vessel for Nigeria's, sorry, FPSO, I beg your pardon. That's how we call it, FPSO. Okay, taking us back to the Market Street. And that's where the Nigeria's, what we call the indigenous EMP, that's the exploration and production company, Seplat Petroleum Development PLC, yesterday stood for honors as the Pearl of the Year. 2019 awards by Pearl Awards. That's the honor for this company listed on the London Stock Exchange. And the CEO of that company, the pioneering CEO, by the way, Austin Avuru, also stood for honors as the CEO of the Year. Austin Avuru is retiring, according to a statement from Seplat last week. Austin Avuru, the pioneer or the founding CEO of Seplat, is retiring in July next year. That's about 7 months, 8 months left in the saddle after 10 years serving and taking Seplat to listing and capital raising at the London Stock Exchange and the Nigerian Stock Exchange. So let's wrap up this and give you a sense of what is coming after the break. Look at the treasury market, and Johnson Chukwu spoke about that earlier. The open market operations, the discount high is changing, but the big story is around the Nigerian treasury bills. This was how we finished off on Friday. 7.29 billion naira, the net naira value for the Nigerian treasury bills. That's the space where you can play as an individual and domestic corporate. 15 deals, and the discount high, or what you call the yield, is where you need to focus on. Now effectively single digit, no more double digit, which is 7.8% on February 2020, 27th February, 8.5%, 30th of April 2020 maturing paper. All the 2020 papers read single digit. The heaviest was the 27th February 2020 paper at the NTB window. It's a very busy week for the market space. What does it hold? Let's take hold at, and we'll come back to you in about 2 minutes.